Nice. This is a weekly review for the first week of March, and fortunately, we finally had our NFP. This is the NFP day right here on Friday. I gave you the levels for the super supporters. You guys already knew what levels I was looking at and what my targets were. This was best case scenario was negated to me. Volume 4 students were told before the fact where the close of the day and the close of the week was going to be ideally for the next week to see lower low for this week and this sell side. So this is a nice attempt of the market trying to deliver lower, because as you know, I am bearish towards this sell side, and I've been waiting for that since a long time, all the way from here. And unfortunately, the market came to stop me out break even, and then it dropped again. But it does not matter what trade I could have taken. What matters is that we want to see this range finally being left. So there is something very important that I teach, and I want to start from here. So well, first of all, in Tuesday I gave you the low of the day, and so far it's been the low of the week. I think they just took this low out on Friday, but I also give the students, and this wasn't given on stream, this wasn't given to the supporters, but this was given in class. And in class I gave them two levels, one here and the other one was up here, and that ended up being the high of the week during Asian session. Taps, drops down lower, and delivers back into the range. Now, whenever you see, I talk about this like it was like easy to give you a high and low of the week. I want to start from here, from Friday. Whenever you see the market spending time around a fair presentation like this, or let alone, let's not think about this as a fair presentation, but let's say it is a normal fair value gap. Whenever you see the market spending time and not leaving from the inefficiency, creating more inefficiencies or bullish beta risk, when the market leaves that, then you already know that the market is likely to start chopping, and this is what it's going to be doing. It's going to be seeking for short-term highs and short-term lows above and below this inefficiency. So let me see, my audio is clear. Yeah, it is clear. So in this case, you have this swing high right here. This swing high, let me make it bolder. This is the first one that we have above the inefficiency. So the market is going to be seeking that one, takes that one out, and comes back into the inefficiency, and is forming a sell side right here. A short-term low. So now the market takes out these highs, and I told you in the live streams, now this is what we wanted to see, but I don't trust this delivery. So I want to see the market come back into the range. The market comes back into the range, and it even takes out this low, because you did not have any swing low right here in this delivery higher onto this one. The market subs that low out, and now it starts displacing, which is good, which is exactly what we want to see. Now from the volume 1+2 perspective, this will be your consolidation range. And you know that the worst case scenario is going to be for retracement, is going to be for the 50%. And this was given also in the stream. And I did not want to see that, because it was going to be so much about retracement. But on a horrible day, as I told you, on a bad day, it's going to come back to the 50%. And this was a bad day for this delivery. But this is permissible. But this is the last permissible thing we have, but it is still permissible. So if you were looking at this from that perspective, you have the 50% of the consolidation range. If you were looking at that from the expansion retracement perspective, you still had this BC right here being below of the 50% of the expansion. So you have the bullish order block, the bullish fair value gap, just this remaining portion, and you have the 50% of the first presentation. Now the market starts pulling from this 50%, and now you start seeing bullish fair value gaps and bullish order blocks. So nothing here is delivering, and I am very clear with what I want to see. I want to see the market start delivering from the low end, from the high end, or the 50%. The high end was going to be good enough, but in this case, again, deliver a little bit deeper into the 50, respecting with the bodies, volume 1 class 3 indicates that this is activating the expansion, the buy program. So from the 50%, it starts delivering higher. And I brought your attention towards this inefficiency, not this one, but this one right here. Okay, and it's coupled with the bullish order block. So uses that one, gives you one tick drawdown, and then delivers towards the first inefficiency that the market did after this swing high gets formed. That one is 98 handles, and then inside of this wick, this swing high right here, you have the quadrants, 120, and ultimately above this high, 149, and it uses it again, by the way, and then tries to keep pushing higher. So as you can see, it's pretty much back and forth, back and forth. The reversal of the day takes place right here. This is why I told you I don't trust this delivery higher right away, but as you can see, the market overlaps everything right there. When you understand this and you go to the daily time frame, see, let me delete that. Okay. When you go to the daily time frame, you're gonna have this one right here, which is the fair value gap that we have in close proximity. Okay, this is the only one that we have, and this is the one that I'm using. I don't care about this one, I don't care about any other thing. I just care about the last bullish or bearish fair value gap that we have in the market. That's volume 2, class 4. Okay, for daily bias, if you are outside of the gap, you look towards the gap. You're in the gap, you look from the gap lower. If you're down here, you look from here towards the gap, and so on and so forth, right? So the market is spending time around this gap. The behavior is going to be taking short-term highs and short-term lows. The short-term highs are going to be left above this gap. Short-term lows are going to be left below this gap. So what do you have? This one right here is a swing high, right? And this one is the first one that you can find above this fair value gap. So the market is going to come here and take out this one, and then come all the way back down to seek for any swing low that was left below this gap. Why is the market doing this? Because all of this is going to be considered as engineered liquidity. Whenever the market consolidates or chops or is sideways inside of an inefficiency, this is what it's going to be doing. It's going to be creating swing highs and swing lows above and below for the market to soup one or take one and then deliver towards the other. And then it's just going to be doing that until you see the market finally just displacing outside and far, far, far away from it, creating another inefficiency. So until I have another inefficiency outside of this range, I'm going to be treating this as what it is right here. Just a back and forth range, high resistant liquidity run conditions. It's going to seek the low, go for the high. You can see this one right here. That is a high. This is a swing high. This candle is higher than the one to this left and higher than the one to this right. The market comes back in there, takes this liquidity out, and then starts delivering, now seeking this sell side. Now again, the ES took this sell side out. That's okay. And then we have this one right here. So this one allegedly will be the one that I'm looking for first, before the lower one. But that's the behavior. Okay, let me ban John real quick. You guys think I don't see who you are? Yeah, it's okay, bro. Look, everyone, there is a time I'm gonna allow you to spam the soundbar. Don't worry, I'm gonna allow you. I'm gonna do it I'm gonna do it as well. We're gonna scream, we're gonna become animals at the end. It's the growth project tradition. But in the meantime, we are to be quiet, okay? Don't worry. How did John do that? He just opened his microphone. So now what we look for or we pay attention to, oh Lord, bro, the legend. We start marking the weekly opening price. Yeah, it is okay, bro. Don't worry. Yeah, this legend, bro. Bro, this dude didn't last a minute. You go banned, bro. Give me a sec. There you go. Okay. So what I'm looking for on a trending week, most of the time is going to be this. The market is going to be forming the low of the week or the high of the week during Tuesday or Wednesday. Okay, that is normally what's going to happen. Now, I want to see Tuesday on a bullish or Wednesday AM being forming the low of the week. Whenever I see Tuesday and Wednesday being opposed like this, then I think to myself that, what a wonderful world. No, I think to myself that the market could be marking the both extremes of the range and it's just coming back instead of the range again because it has taken this buy side liquidity that we have seen in the daily time frame, right? Buy side liquidity here, spending time, and it's gonna try to come back inside of the range. So the highest probability days are going to be most of the time Tuesday, Wednesday, Tuesday, Wednesday, Tuesday, Wednesday, because this one right here is from volume 2 class 1 and 2 perspective, the weekly opening price. Whenever I am below this weekly opening price on a Tuesday or on a Wednesday, that is high probability longs. And whenever I am above this weekly opening price on a Tuesday or Wednesday, that's high probability shorts. And this does not matter if we're on a choppy range. It doesn't matter if we're on a trending range. It's better if we're on a trending range, of course. But whenever you're on a choppy range, this weekly opening price is going to be like your compass, like clear unidirectional one side delivery for these 2 days. Then you can, after these 2 days get printed, then you can worry about, oof, I don't know what the other days are going to do. But look at this Thursday. See that? This is the open, this is the close. It didn't do shit. It just came here, delivered lower, back into the range, close here. This is the next day open, back into the range. Not much, okay? And the AM session was, the whole AM was just a retracement. And then it dumped again, but on a horrible condition. And Monday was a little better. Let's see. Let me look at Monday. Now we're going to start Monday. I'm going to allow you to ask me questions if you want. This is the weekly opening price, okay, on orange. I'm sorry, on purple. The daily opening price is going to be on orange. And you have London AM. Not London AM, what the fuck. You have London session being the low of the day. It is taking what? Big pull for liquidity right here. So London session from 2 to 5 is already way in discount. So target's placing higher, a little bit of back and forth here. You have a bullish for value gap, and then a 930 open, which just starts pulling all the way towards the buy side. So it is seeking what? It is seeking a 930. You are below the midnight opening price. Let me see where is the 830. Right here in the orange, around the orange. So 930, you are below weekly opening price, midnight opening price, 830 opening price, and its own 930 opening price. So starts pulling higher, and the most important and powerful thing, which this day I was bullish for this reason, so I could forget everything else I know and be bullish for this reason. This remaining portion right here, it is void of any trading. There hasn't been longs or shorts inside of this range. So whenever I see something like that, the market is going to be in a hurry to reprice towards that specific liquidity void. And I am never, and I don't care if the market leaves me, I don't want and I don't trust. Well, yeah, sometimes I will do it, not never, but I'm not gonna trust a short against something like this, because the algorithm is gonna keep reminding itself that this exists and it wants to, the market's job is to deliver liquidity efficiently, right? So this run right here is not just inefficient, but it's void. There's nothing here. The market is going to try to come back here and rebalance it. Now, this is not just repricing it. For the market to ignore this, for the market to think of this as deliver efficiently, the market has to rebalance it. And rebalance is something like this behavior right here. So in other words, what I want to see the market do is deliver back and forth, back and forth, back and forth many times in this range. Look at that. This is my short, by the way. So the market is going to deliver buy side, sell side, buy side, sell side, buy side, sell side, and buy side many times. Okay, for the market to consider this efficiently delivered. Now, when I see the cling, 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 it does distract me a little. So it was an easy day towards this one, and longs were found in this range right here, looking for this price action. and looking for the daily fair value gap. Every time I'm in close proximity to this daily fair value gap because of the daily time frame, I'm always going to be looking for this as a target or as an entry model. Okay, that was Monday. Not very complex, kind of easy. And give me a second, please. Forgot to tell the chef. Do you want to eat so early this morning? Yeah, I know, Loris. Don't worry. Do we have to mark the liquidity void even if it has been filled? You said that we can revisit the liquidity void over and over again. Yes. I would like to see for the liquidity void to be disregarded. I want to see a daily candlestick closing above and below, and above and below, and then leaving it. I'm gonna mark it. I'm gonna say if I see every single day of the week passing through the liquidity void, I can disregard the liquidity void the next week. In other words, okay. So I'm gonna keep the liquidity void present for a week, for 5 days, but I am not going to disregard the liquidity void unless I have seen the daily candlestick close above and below. So one day close above the liquidity void and the other day closing below. Then I can forget about it because it has already been rebalanced properly, efficiently repriced. Not just repriced but rebalanced. Okay, new day. I don't like talking about new day opening gaps, new week opening, guys. Okay, so this one right here, where is Monday? Okay, this day I was bearish for this and then bullish. I think I have the clip for that. This is the midnight opening price. This is the weekly opening price. This is a day opening price right here. A day opening price. So let's make it pink, and this is 9:30 right here. Let's make it red. Okay. So what we see is the following thing, and I'm gonna need the hourly for this one, so you can understand. Okay, so this is Tuesday. What happens here is that we have Monday's low right here, and this is a big pool of liquidity because it is a daily low, right? So the market comes in here, dropping furiously, takes out this low, and what happens is it forms a swing low, right? So this is going to be your short-term low, which is why I was looking for this low at 9:30. At 9:30 we come and take out this high. So what we're doing is we're taking buy side first, and yes, we are below midnight opening price. Yes, we are below weekly opening price, but I am bullish. Yes, if we are to see higher prices for the day, I want to see first the market take out this low, and this is going to become your intermediate term low, long-term low even, because it was the low end of the week, the low of the week rather. So it is a weird bullish, yes, but there is an order in which the market should deliver. So from what I explained to you in the hourly, this is going to be your short-term low. The market just comes up here to do what? To trap traders on a breakout. Trap them on a breakout. And then it starts delivering lower, lower, lower. And that was okay. This was kind of complicated, so I think I did a good job navigating you through it. So what we were doing is we were using the CV right here, and I explained you in the live stream why that CV is important. And I brought to your eyes these lows and this low right here, which was the short-term low on the hourly time frame. And I gave you this level. This is the first level that I gave you below this sell side. So I gave you this, and what I brought to your attention was this. Let me remove these opening prices. Was this high to this low. Okay, remember that? And I told you that this is your balanced price range. from this swing low to this swing high is going to be your balanced price range. Okay, so I told you the market should not come back up here, and I think I also have the clip for that. I don't know if I shared it in Instagram, but I told you that the market should not come back up here. This is balanced, balance, 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 balance. Down here is okay. So what you're going to do is you're going to look for a PD array in this lower end, in this lower part. So what we found was this inversion for value gap. This was the PD array that was in the lower end, in the lower half of this balanced price range. This is the first PD array, right? And you also have this CB right here. This is the second PD array. You just have these two. Easy, easy, easy. Not overcomplicating things, just these two. Okay. So why is this? I remember that this day someone asked me, what is this a balanced price range, Mr. Witness? Okay, this is a balanced price range because the market is taking out. So it first prints a swing high, taking out these pre-market highs, right? Prints a swing high, prints a swing low. Then what the market does is takes out this high one more time and takes out this low. So in other words, both sides have been taken many times. So this is 1, 2 times, and you have the lows right here taken 1 and 2 times. So I have both sides of the market being damaged, and whenever the market takes out this low that took out this high, it's kind of like volume 3 class 3. But I am not saying it because of that reason. I'm saying it because the market has delivered buy side and sell side. So all of this that it has been delivered buy side and sell side, all of this should be balanced because the market has delivered nicely both sides in this range right here, longs and shorts. So when the market takes out this low, it becomes a balanced price range, not here. When it takes out this low, so the market does that right here in this kind of stick at 949, wink wink, and therefore the 50% becomes a powerful level. And what I told you is that if we are to kiss the 50%, that is going to be a horrible day, again, just like the consolidation model. And or we are going to be inversing this range and now delivering towards the buy side. That was the other thing that I told you. So ultimately, the market uses the inversion for value gap once, twice, and the bodies are respecting the CV. Okay, so now that I see the bodies respecting the CV, I'm just waiting for a closure either below this low for a consolidation purpose. The consolidation range would be categorized as this miniature price action right here. Okay, or below this week's consequent encroachment, which is also doing. So it's using the low end of the consolidation range and is leaving a breakaway gap. The next immediate is the CV that you can trust and then delivers towards the sell side. Now here becomes important. Jeez, excuse me. I think they want me to tell you this, but anyways then. Okay, no, I'm gonna tell you anyways. I don't fucking care. Okay, what I told you in volume 1 class 3 is this. Whenever you have an expansion retracement model, and first of all, this is expansion retracement. This is valid. Yes. This could be your long. Yes. But I told you that if you have 2 fair value gaps below discount, you always have to be minding the lower one because it can retrace or wick to the lowest one before delivering, right? So if you don't want to miss the trade, you can enter here. But your stop loss has to be encapsulating for the lowest one. In this case, the market does take out the lower one by 1 tick. This is just 1 tick. Taps a 1 tick and then it starts pulling. So once the market reaches the consequent encroachment right here of this previous balanced price range, taps the consequent encroachment right there. As soon as the market touches it, everybody knows that it wants this high and it wants the, you can treat the midnight opening price as your target also. Because this was next day, yes. So what I would do is kind of like an inversion. Find the upper quadrant right here. So remember, it is going to be low resistance liquidity run to deliver 2 a balanced price range, but it's going to be higher resistance to delivering through a balanced price range. The market comes in here, 50%, that is activating my longs. As soon as the market closes above it, you have this bullish order block. It starts respecting the 50%, takes out the short-term low right here because it is high resistance. So it's gonna be seeking for what? For short-term high, short-term lows, for a sub purpose. Try to soup in them. Takes out this low, and because after the market takes out this short-term low, it forms a bullish fair value gap. That is a high probability bullish fair value gap. So whenever I see a bullish fair value gap formed after the market taking out short-term low, that is the one I want to study. So for example, right here, this is a short-term low also. The market takes that short-term low here, doesn't form a gap. No. Takes a lower low right here, does it form a gap? Yes. So we want to study that. In this case, the market leaves it open. So as soon as the market takes out this high, I can trust on a long right here at market or buy stop because I know it's not going to come back to this bullish fair value gap. Then this is the one we use. Very back and forwardy, very choppy as we are around the weekly opening price, but also because we are in the balanced price range. The market finally uses the high end to deliver bullish order block and breakaway gap towards the midnight opening price, and that was it for the day. In my opinion, the best trades that we had this day was this one, this inversion, and this long right here. I don't see anything else I liked afterwards. Now let me go again to the hourly. This is Wednesday right here. This is the last high probability day, in my opinion. Okay, and what we are looking basically is at the high of the week. Whatever high of the week is at the moment, whatever distance it is from Wednesday, the market is going to try to spool towards that. Okay, and this day, we haven't even gotten to this, or did we? Let me see. No, yeah, we did. We took out those highs. So it's gonna seek for this Monday right here, Monday's highs, because that is the current high of the week. So Wednesday, let me take out this. This is the weekly opening price. So London is ideal this day, and it starts right here, being below the opening price. I don't know why I see this pink. Whoosh, I'm getting colorblind, bro. Too many hours in front of the charts. Below the midnight opening price, below the weekly opening price. The market is using the same random fair value gap that I gave you to the tick, the pre-market session. So we have a 930 right here, and we have 830 right here. So the only thing I need is the market to be below two of these opening prices. Remember, I don't care about being below the midnight. I just need the market to be below two of these opening prices. And yesterday, or I mean Tuesday, when we delivered towards this sell side, we were below all of them. We were below the 930, 830, and midnight. And whenever the market does that, it's higher probability for longs. But in here, you're below these two, and that could be enough. Now let me go to the minutes real quick. So remember this day, I wanted to see some sort of sells I've been taking out. So I gave you this low as pending level. Because from here I told you, when the market took out this low, I said, okay, this could be enough. This could be enough if we want to leave this as a pending level. But I want to wait a little bit more though. So this is the bullish value gap that is high probability. And I wanted to see this one fail. So if this bullish value gap, that's high probability. Why is this high probability, Mr. Witness? Again, because it is taking a short-term low. And as soon as the market takes out the short-term low, it's forming a gap. Volume 3, class 3, right? So this is your intermediate term price level. So this gap is getting formed at 930 opening and below 830 opening. So this is very, very powerful. So I'm seeing this one right here, comes back into the range. And I told you in the stream, I want to see if the market can close inside. If we can do that, we're going to see now lower lows towards this sell side. And then I'm going to be looking for longs. The market doesn't do that. Respects it and starts delivering higher. So as soon as I see the market delivering higher from here, I said, okay, no, yeah, that's enough. Now we're going to seek this daily fair value gap. And I remember I gave you other targets that right now I don't know. Because it's showing to me that it is not interested in delivering lower prices. It has formed a swing high, swing low, low being taken out, bullish fair value gap. On a day that we are supposed to be bullish, seeking Monday's highs, all the way up here. Right? So that was the next target that I gave you. I don't know if you can hear the dog barking. Can anyone hear the dog barking? I don't think so, right? Yes? Oh, sure. It's gonna be in the recording. No, no. No, bro. I love animals. The only animal I don't love is Axel, bro. That's an animal. I don't care. It's okay, like ASMR. So when the market does that, immediately turns this into a bullish order block because it is respecting. So how do you know a higher probability bullish order block, Mr. Witness? So you can wait for a bullish order block to get respected, and the price levels or the candlesticks that retrace towards that bullish order block, the bullish value gap, are going to become your bullish order block once the market surpasses this opening price. And the place that you want to be entering inside of the bullish order block is going to be the highest, the upper quadrant. Okay, so the market's gonna come in there. You have a bullish value gap inside of the upper quadrant. That is going to be, again, your high probability P theory also. So this one right here is the bullish value gap. Yes, I don't care about the whole gap. No, I care about only the range that is shared with the bullish order block. That is your gap. Again, I don't think you want to see this on YouTube. I don't think anyone talks like this or teaches this. I don't give a fuck at this point. This is the high probability fair value gap. Where did you stop at? The stop is below the candlestick that makes the gap. Right there. You can put the stop loss is below the 50% of the order block too, so this is nice. But you can put your stop loss a little bit lower, just in case, if you want to be safe. But the stop loss right there, it should be fine. The market comes to the inefficiency, it doesn't deliver. Fills the gap, doesn't deliver. It delivers here, finally, but this is your news candlestick, right? So the market is doing, because it's news, it's trapping traders thinking, oh, news is bullish. So whenever it takes out this high, they're trying to chase this on a breakout. Who? Retail. So this is why they trap them here and then comes back into the P theory. It's just because of that reason. Even taking out this low to make them think that this was a false breakout and this is the real breakout lower. So they're chasing these shorts. They got fucked up here, they're chasing these shorts. But no, we're looking for this. Now, if you're not trading that, nor this, then you can wait for another short-term low being taken out like this, and you have an inversion right here. Okay, but more importantly, this is delivering from the bullish order block that respected the high probability for value gap from the intermediate term low. Because of that reason, it makes this delivery better and this inversion trustworthy. The market now delivers higher, making this drop wet. The whole drop becomes another bullish order block. So I'm gonna grab this right here. I'm gonna borrow this real quick, and that is the range for the bullish order block. The upper quadrant is the one you wanna be entering. Let me remove this, and this inversion shouldn't be touched anymore. This is okay, but it shouldn't be touched. It can be kissed one more time, yes, but I don't want to see anything down here, as you know. So do we have an inefficiency in the upper quadrant? Do we have an inefficiency in the upper quadrant? Do we have an inefficiency here? So you look, you scan. We do have one. Holy moly. Wait, let me see. Right here. This is your gap. This is the one you use. I've never seen an inefficiency being marked like that. Interesting. What the fuck is this? Is this ICT still? Yes, it is ICT still, baby. Interesante, nigga. We're getting saucy today. Yes, yes. I haven't done a weekly review in a long time. I'm feeling generous today. So that is the one you use in this range right here. The market, not this one. Even if you were to use this one, which no sir, but even if you were to use that one, the stop loss is not tagged because again, if you're just placing the stop loss here, you're asking to get fucked in the rear end because you have the bullish order block here. The upper portion of the order block is always allowed for a retracement, right? Just like this one, is always allowed for a retracement. So in this case, it was okay because it was below of the mean treasure of the order block, below its 50%. So the stop loss can be fine there, but not here because the candlestick number 2 is in the upper portion. So what you want to do to be safe is below the 3 candlesticks that make the gap or that create the gap. Then you're safe. But again, that is not the P rate. The P rate is right here. It is inside of the upper portion, and I said this many times in live streaming videos. If you have an inefficiency in the upper portion of the order block, that's going to be your sniper entry. The market comes in here, taps it, and takes out another short-term low, starts delivering higher, and this becomes your bullish order block. The opening price. Now you don't have any. You have this inefficiency, but because it is delivering from the opening price right away, is making this one a breakaway gap. Also, it has closed inside of the daily now. So I told you in the live stream, if we close inside of the daily, we're gonna seek these highs, and I gave you other levels. I don't remember. Closes, short-term low being taken out, opening price, 50%, breakaway gaps, slamming higher, beautiful. And that was the delivery that day. I don't like anything else this day. I don't care. I don't like to talk about any of this. I mean, unless you want me to, but I don't think you want me to. I don't know. I won't do it because I don't want to. I can do it. You want me? I don't think you want me to. I don't know. I'm just thinking to myself now. I mean, that's your chop. I can talk on the chop. Yes, I can show you how to trade the chop. I don't think you want to trade the chop. I don't know. So that is the market taking out Monday's highs. Finally, bam, 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 bam. This is the first swing high, taking out this buy side. All right, first swing high. This is your what? This is your short-term high. The market takes out one more time. This is what? This is your intermediate-term high. How do we know? Because it also delivers a CV, right? We expand the CV. We are not done with the CV just because the market uses it once or closes above and below. So what do we have in here? We have this candlestick making the CV, and this is the high end of the candlestick number 2, right? Now the stop loss should be up here. Again, the 3 candlesticks, but we have the rejection block before, and the rejection block is exactly where the market is stopping this day. And I forgot to mark this one right here. I think this day Axel gave you this level in the stream. By the way, this day I was looking for, where were we? We were in here. This day I was looking for longs. The reason being I wanted to see this one gone, and well, this one gone, right? I told you this one, and this one. The reason being is because we are below minimum opening price. Easy. It's the same shit every single day. How do I know to be long and short on this horrible condition? Well, opening prices. Then we have the 830 right here. And then the 930 was right here. So if I am to be short, I want to be at least above 2 of these, as I told you. 930 were below them. So I'm looking for longs towards this high. And then the market takes out the higher high of the day and taps into the rejection block on the hourly. I think this level was given to you by Axel. I don't know, I'm not sure. But the market delivers beautifully towards the buy side, just as I told you. And then finally, they have a bullish rebellion up here in the 5 minutes. And finally, hits that right there, and then reverses. And this is just a little bit of back and forth. I don't like this day at all, you know. This day was minor intervention. Monday was also minor intervention, by the way. Was it Monday or was it, what day was it? No, was it? I think, yeah, it was Tuesday. Tuesday and Thursday. Thursday, not much. So yeah, I'm willing to say that Thursday was less of a manual intervention than Tuesday. Tuesday was more of a manual intervention than Thursday. Yes. And we're gonna finish with Friday. So the same things. We are below minimum opening price right here. We are below 830, and at 930 we take sell side liquidity. And I gave you the low of the day also. This day, because it was very, very easy. You have a bullish value right here. I told you I'm looking at this. It could tap this one before delivering higher. That's what I said in the last stream. And it's pretty much what it did. Take out this low. And the reason why I was looking for that first is because you had these relatively good lows. Like this, see that? So the same thing as the liquidity void. I don't care. I am not going to long against relatively good lows. I want to see them gone first. The market does that. Beautiful. And you have back and forth inside of this BC. I already talked about this. Short-term low being taken out. This is the first gap, high probability. Taps it and then delivers. This is the upper portion of the other block. In the upper portion, what do you have? Fair value gap right here. So this is why I use this one. And this is why the market delivers from that one. Beautiful. And one more time, beautiful. The target for the day was this swing high, and the best case scenario was going to be the daily fair value gap low right here. Okay. Once the market reaches this high, remember, I am looking for continuation, speed. So I want to see the market take out the high and leave a BC or a bullish order block. The market doesn't do that, but it just falls. Then it comes back into this range, into this high, stoops it, and delivers a CV. So this is enough for me to know it's not going to come back up here. As soon as I see that this is the same level twice, and the market is not able to keep pushing higher. So that is the telltale sign that it's not going to do that. And we are to see now these lows, because it's going to be a reversal. So short-term and intermediate, if you will. Comes in here, inversion for value gap, fills it very, very sloppy. This is also a manual intervention day, by the way. So we had 3 manual intervention days this week. We had Monday and Friday. What other day did I say? Just Monday and Friday. No, I'm sorry, Tuesday and Friday. Just 2 manual intervention days. Tuesday and Friday. The rest are fine. No, Thursday, okay. Yeah, Thursday is not that much of a manual intervention. I can see what happened from an algorithmic standpoint. But what I'm sure is Tuesday and Friday, those 2 days. Okay. Okay, any questions, any doubts you may have? I'm gonna answer 3 questions. I gotta get going. You know that my family's here. This is why I haven't been able to produce the YouTube recorded video for the NFP model. The NFP, the game changer. The real way, the final way to backtest and journal, so you finally see your knowledge become wisdom. And wisdom is useful. It's just like, because if you only have knowledge, it's like having information on your brain. I mean, you have the phone and you have access to everything, but still you don't know how to apply it. So the video that I'm preparing is gonna help you. It's gonna help you with that. It's gonna help you make. But it is a project rather than a video. It's not gonna be just one video, because it's unrealistic to believe one video is gonna change everything forever. But it's a whole progressive development, day by day, what makes the change. Okay, We have the questions. Says the hourly also now in a balance price range from Friday with what showed you before. We took sell side and buy side. This one? I don't know what you're talking about. About this? The hourly also now in a balance price range from Friday. Yes, sir, but I'm gonna need the market to. Well, because it is Friday, I wouldn't treat this too much as such, because they can throw a little $1 million missile in Iran again, and anything can happen on Sunday gap opening. So I'm not that eager to look for that scenario. This one is more likely, more like it. Have the high, have the low. So take this buy side, take this sell side. So this is delivering up, down, up, and then when the market finally takes out this low, that's nice. And then it comes in here, doesn't take out the balance price range 50%, stops right there in the bearish order block, and then it drops. Because it's Friday. And I don't want to use Friday for that, because again, Sunday's gap opening could make this invalid. What is the next one? El short-term low del martes lo consideras short-term low porque no creó un gap. Sí, mi chiqui baby. Can you try backtesting Thursday PA again? It was choppy. Yes, it was. You want me to? If you want me to, I can do so. Only for you, Renee. Bro, I thought you had the levels I gave you, Renee. I was you and other students. It was like 5 of you in the classroom. None of you took this level. I mean, I don't expect you to limit the level, but none of you remembered it. And I say women. Women are mostly like organized. They have everything on a notebook with flowers and whatnot. But no, nobody had the level. So this is why maybe I'm gonna make a level or a channel for levels. But I'm thinking mostly I'm gonna make the channel for levels for the supporters, because the supporters already have been receiving levels by me and by Axo also. So I'm thinking I'm gonna make a channel for levels there in the supporter, yeah. So that way is everything more organized. So what are we looking at here? So we're looking at this high and this high. Okay. The market is below the opening prices. So the first thing that I'm looking at is what happens in the first 3 minutes. Okay. The market opens, slams higher, and leaves us this wick. So this is the wick I'm gonna be using right here. Okay, I'm using that wick right there. The market delivers higher from it, and I'm waiting. Okay, I am not in a hurry. I am not gonna be blindly executing on anything I see, because I don't expect Thursday to be a sell-off day or a buy-off day. Is that how you say it? Or just a continuation day without retracements. If you're shorts day, no. Thursday, no. Monday, I mean, Tuesday and Wednesday, those could be most of the time those days. On Thursday, I'm just eager now to see the market deliver back into the range, but I'm looking for longs because of that reason. These are the buy sides above the main not open. So I'm gonna use this first presentation, which I don't think it is the first presentation. This was the first presentation according to me. Okay. So most of the time I want to see the market retrace towards the first presentation. So this gap I don't care too much, but I can study. So how would you trade this, Renee, or how would you use this information? So if you're looking for this high and this high, you want to wait for this to get respected first. Why? Because we have just created a large range of open like this. Okay, so the market is likely to retrace towards discount, right? So I'm going to be waiting for that. As you can see, the market is actually retracing to discount. And this whole thing is the first presentation. I am utilizing this week's consequent encroachment right here, and the market disregard this fair value gap. When would this be valid? Okay, this is not valid because first of all, the market is in premium. Discount is down here, so this one is in premium, but it could deliver from here, yes. So I am waiting for the market to use it and trade above this opening price. Remember that. Okay, so that's basically what I'm looking for under the idea of the bullish order block that is high probability. But the market comes in here, closes below. As soon as the market closes below, taps the first presentation. Now I'm gonna need more. What am I gonna need? Because the market is spending time around this gap, I'm gonna use it, waiting for the market to treat it as the first presentation also. In other words, I wanna see the market use the high, the 50 or the low, and then do something else, right? I don't trust this closure right away and the market delivering towards this opening from it, because I want to see the market deliver from the high, the 50 or the low. That is algorithmic. So just like this, the market is delivering from the high towards this low end of this week. Taps it right here. This is also the upper quadrant of the representation. So this becomes now algorithmic, because the quadrants of these pillars are also very, very important. Mr. Winners, I wouldn't have seen that. Okay. Then see the upper quadrant of the daily fair value gap. That is also important because it is a high time frame pillary. Market is from the upper quadrant of the daily fair value gap, then is delivering with the speed velocity, and is doing what? The same thing that we have discussed. It is taking a short-term low and creating a bullish fair value gap. Okay, what is this then? This becomes your what? Bullish order block. This will be the range of the bullish order block. Okay, and this would be the upper quadrant. So this is the portion of the gap inside of the upper quadrant of the bullish order block that the market utilizes beautifully one more time and then continues delivering higher. So what did I tell you here? I told you, okay, now because of this reason, and I was looking at longs from this gap also, said, okay, now you mark this gap because it's leaving in the first presentation. Now you want to mark this gap, and I also marked like this bullish order block. So you mark this gap in the order block. And that is when the delivery, the high probability delivery starts. That is when it starts. Okay? Because it could have pretty much retraced deeper into this first presentation, even the 50% or even this gap. So I don't care about sniping shit. I only care about high probability trades. And the high probabilities are also going to give you snipers. Like super nice entry right here. Right? So the market starts delivering higher and it makes another bullish order block. So this one should become wet. This one should become your propulsion block. So in Livestream I told you about this. And again, I uploaded the clips on Instagram. So you can go and check that in the highlighted section for live streams. This one becomes your bullish propulsion block. The market taps the opening price as much as the upper quadrant doesn't reach the equilibrium, or I'm sorry, the mean threshold, which is nice, and then it starts delivering. The next one doesn't even get towards the opening price. This is good. That's exactly what I want to see. And then all of a sudden it starts pulling, target hit. That's it during the stream. Then this is your bearish order block or change the state of delivery. Now for shorts. Let me remove this and that. So what would have been the short right here? So you have two options in here. You have two options. The market is getting in, getting out, right? The first option is marking your expansion retracement. Okay. And above this, do you have an inefficiency? Do you have a bearish order block or a bearish value gap above this? Not this one, but this one. So above the 0.5, what do you have? You have a CB right here. I'm sorry, an inversion. Where does the stop loss goes? Above the candlestick number 2, above the candlestick that makes the gap. And you have this bearish order block also. So let me make it like this so I don't confuse anyone. So this is your very short block that is above the 0.5 expansion retracement model. And this one right here, again, this is your intermediate term price, right? It's creating a gap. And this one right here will be gauntlet. And I don't like to talk too much about it. But this is the gauntlet. I think this is the gauntlet. Okay, the stop loss goes above this candlestick. If you want to be sure, put above the 3 candlesticks that make this gap. The market comes in here, surpasses it because we are very, very weaky and very, very back and forward, high resistance. So it's going to be seeking for short-term highs. This is one. This is the one the market goes towards. Takes that one out, and this is the very shorter block. That's going to be acting as a reclaimed very shorter block. So the market is doing something here. It's delivering up, down, up, down. So when the market delivers below this low, all of this becomes balanced price range. And we have a beautiful immediate rebalance right here. So it's not going to come back to this CB because CB becomes a breakaway gap. Whenever you see the market leaving a balanced price range with a CV, that's high probability breakaway gap, especially if it closes below. If it closes below, leaving that's better. Because if only wicks, you can still see this getting hit. If only wicks down here, you can still see this one getting hit. But nothing up here should be taken anymore because this becomes a balanced price range. But once it closes below, then this is higher chance the market is going to leave it open. Immediate rebalance, and you just start just pulling lower like a maniac, and then back and forth, and it doesn't reach the balanced price range, which is nice. Takes out the short-term high again because of the conditions we're in, and they just breakaway gaps again. I don't like this day too much, but it made perfect sense. And I was looking for lower lows later. I told the students, hey guys, I'm still looking for these lows and lower levels this day. So this is just short-term high getting taken out. CV, I don't know if it got in here. I think it did. You have a one tick. Other CV, upper portion of the daily fair value gap. And it finally delivered. This is what? This is accumulation of longs, right? Because the market is spending time below this low. Accumulation, and then delivers higher. Next question. I don't want to spend too much time. How much time am I? I'm going for... Where do you see that? How can you see that? 57 minutes. Okay, almost an hour. Jeez. Okay, one more question. Propulsion block. Yes, a propulsion block is... This is a propulsion block. So whenever you have an order block, like this whole group of candlesticks is your bullish order block, right? This is your bullish order block. Oops, I have one for order block. It's OB right here. Whenever the market trades into a bullish order block, okay, and then forms another one, give me a second. The order block that the market forms after respecting the first one is going to become your propulsion block. That is gonna, so therefore you expect the market to start propelling price higher. That's when you start expecting the speed and velocity to getting activated, to being activated. Slamming. I actually wanted to see volume 3 class 2 right here. Because you didn't see that, I told you, remember this low, it's gonna be our pending level. So I hope you took notes of that because we went towards that one on Friday. 4 NFP. Jeez. Is that random, or do you know? Do you know that? Do you know what? What you have sent me? Let me see. I don't know if I can talk about that one here, Loris. Okay. This is going to be everything. What happened, Mask? Are you asking something? No? Okay. This is going to be everything for today, fam. Now you... Ay, bro. Primera vela, como tengo entendido que sí es una vela bullish. Es una vela bearish. Y, ok, para eso te voy a explicar el otro weekly review. Ahorita quiero que todos se enloquezcan. Yeah, this is getting recorded. So everyone please go crazy, go stupid. I want to finish this.
Bala. Relax.